Okay, guys, welcome to another episode of my analysis, weekly analysis. Today I decided to show my face. So, guys, this is my face. So, just let's go to it. Let's get right to it. So, today we're going to be looking at how I do my top-down analysis and how I come about my daily analysis. You understand? So, today we're going to be talking about EURJPY, right? We're going to see how I got my trades on EURJPY. So if you can see the markings already, this is a V-shaped key level, which is a weekly key level. Remember, before any key level, there will be a liquidity point where price would grab, then tap on the key level, then go above. So now, what you just have to do is you mark out these key levels that is resting close to a liquidity zone. You mark out the key level, like we can see another key level here. This is another key level, right? And it's also on the weekly time frame. Just follow my mouse and while I go. It's also on the weekly time frame. This is another key level. This is another key level, and this is the liquidity resting below this other key level. Right, this is the liquidity resting below this weekly key level, while we are also looking at this key level. Now we marked out the key level and we are going to wait for price reaction, right? We are going to wait for the reaction of price to see what will really happen at that key level at that point. So we just wait. Now when we see this rejection, the first rejection happened, and okay, let me close this. Let me just remove the line chart. Now look at how price came here from this point, tapped and rejected on the first rejection, right? That was price rejection. Now when we saw that rejection, we knew that this key level is about to hold, right? We switched to 4 hours. When we switch to 4 hours, now see how price rejected on that weekly. We saw how price rejected, tapped and rejected and stopped here, right? At this level. Now when price stopped at, what we are waiting for now is the break of a 4-hour candle. No, not the break of 4 hour. We want to see a break of structure, like a 4-hour break of structure, not a candle break right now. We're looking for a 4-hour break of structure. Now when price stopped here, we just keep following and you see how price is. Now our break of structure, if price did not sweep this low, would be here, would be this top at this top here. Sorry, would be at this top here. So after price rejected here, we're just supposed to wait for price to break this structure and give us our 4-hour break, right? But price didn't do that. Price didn't do that. Now price came back. This is what price did. Price came back like this, tapped, rejected, went up here, then came and swept this low. Swept that low, right? Price swept that low. Swept this low here to cause our sweep. Then making here the 4-hour high, the next 4-hour high that we're going to wait for the break. So we will now be waiting for the break of this structure, this high here, right? Now while waiting for it, we just mark the high as our 4-hour high that's supposed to be taken out. This is a 4-hour high. This is the liquidity grab. Everything is happening inside our key level, weekly key level point, right? And when we saw that break, the next thing to do is to mark our 4-hour key levels. mark our key levels, then we switch to the line chart. Normally we are going to mark out this key level point on the 4 hour, mark out this lows, this V-shaped key level that was broken, that was swept. This block supposed to hold, but it was swept. So we'll mark out this point. This is called our QMR point. Then this is our other block key level point. So we'll mark it out and also wait for reaction on that 4 hour time price. So this is what price did. Price actually didn't come immediately. So price did this, did this, did this, did this, and then came to our level. And price respected this level, this other QM level. That's what price respected. Now let's go back and do some analysis. Now when price respected that key level on the 4 hour level, we will now take out this other one because it's of no use anymore. Sorry, let me just delete it. Okay. Now this is where we'll now watch. We'll now be watching what price will do. Now I have a rule when it comes to this kind of this is my special rule I use for trading. You understand? So once I'm on this 4 hour level and I have seen price rejection, I will go to my 2 hours, right? I'll go to my 2 hours and I would see how price broke the what's it called, the 4 hour candle, I mean the 2 hour candle. This is the last candle. You see this bearish candle tapped on this level, this is our 4 hour level, this other 2 hour candle tapped, and this one followed for the breakout. Now what I do is, this is now a breakout, right, from the 2 hour. This is now a breakout, and this is also can be seen as our other block, right? This can be seen as our other block, and price is supposed to respect that other block, right? So if I want to take this trade now, I'll take it from the other block and a little bit above here. Now this is on the 2 hours time frame. This is on the 2 hours time frame. Then on the 4 hour time frame, that could be another entry also on the 4 hour time frame. Now let's look at the 4 hour time frame, what really happened there. On the 4 hour time frame, we are seeing, okay, 4 hour time frame, now we are seeing the 4 hour break, we are seeing liquidity, this kind of a liquidity grab, right? This kind of a liquidity on the 4 hour. The price was very, you understand? Price was very accurate in doing what it does best. So from 4 hour we switch to 45 minutes to go and get our block so we can trade. Remember, we set our first entry on the 2 hour time frame. Then the second one is now to look at liquidity, where is the key level below this liquidity. Now if you look closely, you can see this is a 45 minutes key level below the liquidity. This is now the second entry on the 4 hour time frame, and that was the one I actually entered. Understand? That was the one I actually entered, and my stop loss was just a little bit below this. Now as per target, where are we targeting? Right? We are going back to our first target is our 4 hour high, right? The first target is our 4 hour high. Where is that high? Is this high here, right? This is our first target. Our 4 hour high, you can still make here our first target because it's the closest liquidity point. So I close one of my entries here, and the second one goes down to this point. Now remember, we are trading on the weekly, so our final our final take profit would be on this weekly high, right? This weekly key level. That's where I would target as our final take profit. But let's keep that thoughts open for now. We still have here, because price can still tap here and give us a reversal, or price can take out this overall high. But for now, we'll just target here and close for the day, right? So um now let's go back to the 4 hours. So now, once we have gotten that entry and we are targeting this high, remember, price moves on like a wave. Price goes up, comes down, goes up. These are all internal range liquidity and breaks. These are all internal range break. Got the first internal break. Now, what we should be looking at after this first high was taken. The first high was taken, all still internal, but it was taken out, right? Now, we're going to look at our 4 hour chart, our 4 hour candles. We're going to pay close attention on what is going on our 4 hour candles. Now, if we see how price was breaking, sorry, I want to make it. If you see how price was breaking this high, right? If you see how price was breaking the highs, you see that price came here. Okay, price came down from here. This is where you have to learn how to read the market, right? Price came here, price broke here, broke that high, price swept here, liquidity sweep, went up, right? Actually, then gave us here, gave us here, gave us here, and broke. Now, if you look closely, because price will always react after a break of structure, price reacts on the 50% of that range after the 50%. So we are going to mark this is like our 50% range. This is our range, 50% range, right? So we expect price to retrace back just a little bit below this 50% level. You see this level? Let me mark it properly. This is 50% level. So we expect price to react below. And merely looking at what is going on, we see that the only place price can react is at this point, because there will always be liquidity graph, then a reaction on a key level before price will take off, right? Now, this is the liquidity graph for me after the 50%. This is the grab, liquidity grab, right? So that's the liquidity grab, Then the point where we're expecting price to react from is this point. And I got this point from the 2 hours. Why did I choose that point? Because that point shows an engulfing candle. I think there was an engulfing candle. Yes, if you zoom, you see that that was the only point that price did not react from after the 50%. So we are expecting a reaction from this, key level zone. Now price respected. Now we're not going to trade because we don't know. Sometimes price can be funny and come down to this point, right? This QMRO point. So we mark this point. We also marked this QMRO point, right? Well, I think I even also marked, yes, I marked this QMRO point. Now it depends on what price will do, because we don't know how how far it will go down the 50%, right? We do not know how far. So that's why we would mark those points and wait for reaction. One is to wait for reaction, and when we see reaction, we then enter. Now this is what happened on the 2 hours time frame. Their price rejected once, came back and rejected with a bearish candle. Now we are paying attention to candle coloration at this point. After you mark your key level, you are paying attention to candle coloration. You see how price was coming down, shows a bearish candle with this blue color. If you're watching from the normal trading view, this color will be red, right? Because that's how the normal default setting is. The colors will be red. So now candles are coming blue. For my own app, it's a blue candle. It's coming down, and the last candle that tapped here on that line, on the 2 hour line, and started go and rejected. Then we now see a bullish 2 hour candle that's trying to go up. Then it swept that last candle that tapped on the line. Yeah, I swept it. This shows that our price now is now going bullish. This just shows that price is now going bullish. So I represent this as a candle break, as a 2 hour candle break, right? Candle BS. So once we see that break, whether it is sweep, whether it is close of the candle close on the body, or it's just a sweep, it is a break, right? It is a break, it is a change of structure. It's a change of structure. That's how I see it. So once we see this, we'll move to our 15 minutes. Now, why do I move to 15 minutes? Because I have noticed that when you get your 2 hour key level, your entry should be 15 minutes. You get your 4 hour key level, your entry is 45 minutes, right? That is how I have come to know these things. So now what do we see? Key levels on the 15 minutes is not that clear, right? There is no clear key level on the 15 minutes. Let me put on the line chart. You see all these places has been respected. Here it has been respected. So but we have a liquidity point which is here. So definitely price is going to sweep that liquidity, maybe come down to this 15 minutes point, but most times it will not get here. So but since it's not that clear to us, we'll now use 45 minutes. Since it's not clear to us, we'll now use 45 minutes, and this is the 45 minutes. So our 45 minutes will now do this. If pick here and also pick the clearing of this liquidity. So what we just do is, what I did was I placed my entry just on that liquidity point, and the exit will be a little bit below, you know, this level to what you can hold, right? So I placed my liquidity, my entry there and my exit there, and my target still will be this other high. That's the 2 hour high, right? Or should I say the 4 hour high? This is my first target. Then overall target is the 4 hour high too. You see how we are building bias. Now after this entry was taken, after this high was taken, before the high was taken, price did something else. Price did something else. Well, price came back to this 2 hour level, rejected. Then I entered, but I didn't really enter from here anymore. I didn't enter from here, but this is just something I just did for me to, just to know what price is doing. So we're expecting this high to be taken, and on a bigger scale, this one is going to be grabbed also, and also on the weekly scale, on the bigger scale, on the weekly level, this one will be grabbed. Sorry, this one will be grabbed. So we are keeping our options open for now, right? We're keeping our options open, but we get this we also get this. This one is the final exit point, but we are not going to target here. We are targeting here as the weekly key level because we expect price to go to. I've been holding this trade from here, you understand, from here, and collected my first target here, collected my one target here, so the final target is remaining this one. So we're waiting for it to happen. So that's how I got this trade setup. You see how this is so easy when you mark out your levels and wait for reaction. It will be so easy for you to enter. Thank you very much.